the interesting nuance of, and you're absolutely right about Korea is the largest structured product market in the world. Why that's not necessarily supportive of Asian liquidity is because over the last 5 years in particular, the bias of the underlyings that the Korean retail universe now write these products over is increasingly US markets. And so because that shift happened at the same time that the US retail structured product market blossomed into this huge animal too, that's why you're seeing this kind of Asianification, if you like, of the US volatility surfaces. It is exactly because the dynamics that have dictated Asian volatility markets for many, many years, as you well know, firstly from out of Japan retail and then increasingly out of the rest of the region, were exactly driven right to the US. And I think what's quite important to be aware of right now is what drove that flow. Why did Korea become the biggest retail structured product market in the world? It's purely bond substitution. Korea, not so long ago, was considered very much an emerging market economy, double-digit interest rates that went down to 1.5%. It was because of that there was such a huge shift to use products like retail structured products that are essentially just selling volatility on equity markets. And so as that's shifted back now, as interest rates globally start to rise again, it's going to be very interesting to see how that plays out and whether we're going to continue to see those flows and volumes in the same size that we've seen historically. So we get a lot of questions on that because it's these subtle structural nuances that we feel like we have a very good handle on by being in the region, even though they're actually affecting US markets disproportionately these days.